Hi and welcome to Sunday Night Charts, where we preview the charts for the upcoming week to see if the market is bullish or bearish based on some proprietary indicators. I'm your host, Steve Van Metre, and thanks for joining me on this inaugural edition of Sunday Night Charts. We'll provide all the details at the end. Let's jump right in and start out with the consumer discretionary sector, symbol XLV. Now, we're going to look at a one-year chart, but I'm going to give you some short-term indicators based on price and momentum. We'll discuss more of that later. But looking at the charts, we can see from the post-March run-up, it looks to appear that there's a potential topping pattern here. Now, we've seen similar formations earlier this year, two of them, that went on to make new higher highs. And it's important to understand as we look through the charts today that a bullish trend starts with a cross of the 50-day and a reconfirmation of the 50-day moving average. So what we had on Friday was a confirmation of the 50-day moving average. Now, looking at my proprietary indicators, what we see is, well, a very bearish signal across the board. But remember, these are short-term indicators. The intermediate-term indicators still are constructively bullish, at least looking at this chart. Let's move on to XLV. Well, we don't see such a move similar move up. Now, XLV is the healthcare sector, and it looks to be struggling as well. And it had the same problem again back in June, where it went on to make new higher highs. It has slid below its 50-day moving average, but apparently for XLV, it's done this before. The 200-day seems to be a much more important line of resistance for XLV. Looking at the short-term indicators, price says bearish, but momentum is starting to turn. But overall, that is a bearish signal, but a potential constructive change coming for XLV. Let's move on to Biotechs. Now, notably, my indicators actually caught this whole move here and said, hey, short-term, this does look like a topping pattern. And well, from a distance, it really does. You can see a potential left shoulder, head, and possibly a right shoulder here forming with the neckline right here around, I'll just say 126. And for those of you who are tuning in for the first time, I am certainly not the most proficient person around on technical analysis. There are many experts who offer pay-for services if you're looking for more exact price targets. Now, looking at the indicators, the short-term indicators are bullish on the IBB here, but just hang tight. It is going to look like there's quite a bit of resistance up here on an intermediate term. It certainly doesn't look quite as bullish to me. Let's move on to the tech sector, symbol XLK, and it also looks like it's headed lower here on an intermediate term basis. It closed below its 50-day moving average. And again, that's where you start to see topping processes where it'll bounce, it'll close through the 50-day moving average and struggle right around here. Now, it doesn't mean it won't get all the way down to the 100 or possibly even reconfirm the 200-day moving average, but you start to see tops form as price struggles around its 50-day moving average. It's not common that you just see it kind of slice through like we did back in March and just rally briefly up and then continue lower. Looks like a blow off top here on the short-term momentum short-term indicators. Price is bearish. Momentum just flagged positive on Friday, but overall bearish on the short-term indicators. Let's move on to SMH. And SMH is your semiconductors, and it too is showing a similar pattern to XLK. Potential blow off top, potential topping pattern forming. On a short-term momentum indicators, price is bearish. Momentum has flipped positive, but again, these are very short-term indicators. On an intermediate term, it looks like it's trying to hold its 50-day moving average, and that is constructive. So for those of you that are overly bearish on equity prices, afraid of another March dump, well, at least so far, we're not seeing that in any of these indicators. Moving into the large cap value, the energy sector now paints a completely different picture to the markets. Now remember, most of the markets have been driven by these large U.S. tech companies, and so we start to get into the value space, we see a completely different picture. Now XLE, let's talk about where it is on the short-term indicators on price, bearish. Momentum just recently flipped bullish, but this picture is not constructive at all for a short-term move higher. Now, it doesn't mean it can't go higher and can hit its 50-day moving average, but look at what happened here. It crossed over the 50-day, tried to reconfirm it, failed through it, and that's where you start to see a top form. And now it's come back up around this $33 price level, which starts to make you really see a potential, left shoulder head, right shoulder topping pattern here, where the XLE needs to not only get through this position, it needs to get back up above its moving averages, or it's realistically headed back down at least into this high $20 range, potentially a revisit to the low 20s, where we would then look for a double bottom. So keep an eye on this. This is not a very bullish picture at all. Moving into financials, which generally trade generally trade in line with Treasury yields and opposite Treasury bonds. You can see the financials have been struggling to ride their 50-day moving to average higher. Let's take a look at where their momentum indicators are at, and they are clearly bearish across the board. And financials are in this kind of sell zone where between these two purple lines, where you see sellers have defended this level very, very clearly, and we see this uptrend line has been broken. Overall, the short-term picture is bearish. Intermediate term, not a very strong picture. Although you can say it is holding its 50-day, but it really needs to hold there to have any validation. This is headed a whole lot higher. Switching over to utilities. Again, value stocks did not perform anywhere like their growth stocks, and there's this belief that there's going to be a rotation into value. The other factor is it could be that value is going to lead growth lower, so keep that in mind. Utilities, this is a pretty ugly chart. We've got bearish signals across price and momentum, and it's fighting those almost on a daily basis, just flipping back to say, bullish, bearish. And even on an intermediate term, you can't look at this price chart and think there's a lot of positive going on. What you can see is this thing is coiling in between a range. And the question then is this going higher or lower? At the moment, it appears it's going lower, but it's flipped back and forth. Keep an eye on this one. Let's move over to XLB, and this is going to be your materials. And clearly this has been boosted by gold. So you can run a chart and compare XLB to precious metals, and you're going to see that this is really bullish simply because of precious metals. And it's crossed its 50 days, reconfirmed its 50 days, riding its 50-day higher. And as with no surprise, you see bullish indicators on the short-term scale. I mean, you don't even need to look at that. You can look at the chart and see that this is a bullish picture for XLB. Let's look at the major indices, the S&P 500, and we've got some negative short-term signals here. Bearish on price. Momentum just flipped back positive, but again, these are very short-term indicators on Friday. Overall potential blow off top, but remember, S&P 500 has been through this before recently, where it made a high, pulled back, made a second attempt at it and pulled deeper, and then went on to make new higher highs. And it did it again here in June. Is it doing it here again now in September? Possibly. Hard to say, but from a short-term picture, this is not constructive. But again, short-term moves can switch very, very quickly. How about I normally don't look at the Dow, so maybe I'll have to add that to my deck. But let's go over here to the Qs. And what we see here is the Nasdaq. Again, very bearish picture here in the short term. Price is got a negative momentum, just briefly flipped positive on the short term on Friday, but I wouldn't hold my breath on that. This is not a very strong picture for the Nasdaq, which crossed this 50-day. This is its first attempt to reconfirm it, and it's failing. So again, this is not a positive signal for tech stocks. Let's move on to XLP, which is your consumer staples. A lot of this has been driven by retailers, namely your Amazon stock. And what do we see here? Cross to the 50-day, rode the 50-day down, tried to reconfirm it, failed, but made it back over, tried to reconfirm it, failed, and then boom, now you almost have your very first reconfirmation of the 50-day. Looking at this, this is a very clearly bearish signal on the indicators, and potentially, but on an intermediate term, you have to like it's holding its 50-day moving average. Remember, rallies start with a cross and a reconfirmation. It's just really ugly down here. Moving on to industrials, here's a chart you can look at and tell that it is bullish, and certainly the indicators are confirming both that it is as well. Across the 50-day, reconfirmed it. It's continued higher. So far, the signals say bullish on the industrials. Moving on to the gold miners. Now, everybody has a big opinion on miners. The most common opinion is super duper bullish. Maybe the market is most bullish, not on tech stocks, but on gold mining stocks. This is clearly a consolidation pattern. It crossed the 50-day, reconfirmed the 50-day. It's bouncing right up along the 50-day. The short-term indicators are bullish, and the intermediate terms are also bullish. The question is, for the gold bugs out there, or the bulls and the bears, is this consolidation pattern higher or headed lower? For now, I expect it's going to head sideways for a bit more time. Let's move on to, as we move into the mid-cap growth, we've got VNQ, Vanguard Real Estate Fund, recently flipped from bullish to bearish on the indicators. It's closed below its 50-day moving average. It's kind of been struggling along the 50-day. Normally, you want to see more a trend like the XLI, where it's kind of bounced off of it. You don't want to see it kind of dragging itself along the 50-day moving average. I'm personally hard to believe that real estate market is bearish, although the home builders are super bullish. The H.8 data, or the weekly credit data, is not constructive for the real estate market. But again, short-term indicators here are bearish. It's using its 200-day moving average as an area of resistance. The question is, can it find support around its 100-day moving average, or is this coiling pattern that we're seeing here mean lower real estate? How about we move over to XOP? And this is your oil and gas producers. This is kind of interesting because we have a short-term bearish signal on price, a bullish signal on momentum, and that's simply because we've seen this move higher here, this triggering momentum. But this looks like your XLE. You kind of be very careful with this one, because it's simply telling you that it might just come up, tag its 50-day moving average, and roll over. Remember, rallies start when they cross the 50-day and confirm. The other side is rallies to the other direction, to the downside, start with a cross of the 50-day and eventually reconfirmation. So here it crossed here, and it kind of reconfirmed under, just briefly crossed over under. So this, from an intermediate term, is indeed bearish. Let's move on to the banks, KBE. And this thing is very clearly bearish on the indicators across the board. And there's a lot of people out there that believe that your regional banks that are mostly located in KBE are signaling that there's going to be a big drop here. And if that does happen, well, guess what? Treasury yields are also headed lower with it, because generally bank stocks and treasury yields move in a similar pattern. And again, this is bearish. It's sitting below its 50-day, below its 100-day, below its 200-day, and it's coiling, looking to make a move either higher or lower. And the trend lines and the indicators suggest it's headed lower. Let's move over to your mid-cap blends, XRT, which is your retailer ETF. Again, you're going to see, companies like Amazon stock driving this one. Cross the 50-day, reconfirmed the 50-day. From an intermediate term, this is bullish. From a short term, based on price, it's bearish, but momentum still in a short term positive. I mean, it's confirming its 50-day. Does it go higher and bring the whole market with it? We'll find out, I'm sure, fairly soon. Looking at ITB, and this one is your home construction index. And as we would imagine, this is bullish. We've seen just in the survey data from home builders, they are super bullish, and their stocks are reflecting that across the 50-day. Hasn't even bothered to really reconfirm it at this point. This is bullish across the board on all the indicators, short-term and intermediate term. How about the junior miners? Expect a similar picture here as the large mining stocks, and we expect this to be bullish on both cases, and it is in an immediate term. It's bullish. The question really here, and this is a bigger picture for those who are invested in gold, is the dollar, which we'll look at, is it going to upend the gold party and send gold prices lower, or is the dollar going to break down as so many people believe and send gold prices to infinity and beyond? Time will tell. Let's move into small cap blends. We'll look at IWM, which is your Russell 2000 ETF, and we've got bullish signals across the board on this one. And it makes sense across the 50-day, reconfirmed the 50-day, and it's riding the 50-day here. So small caps right now bullish on the short and intermediate term for the Russell 2000. Now, I don't normally pay much attention to the international stuff. I do have it on my trade screen, but I don't look at it. But we'll just kind of walk through there because I don't have it at the moment in my trade screen. But the EFA, which is your MSCI EFI, bullish signal here, short and intermediate term. How about the Eurozone, bullish short term and intermediate term? China, well, China's showing a potential, that is rolling over here on a short-term basis. See how it crossed back over its 50-day? It's reconfirmed the underneath it. So it appears that the Chinese stock market is starting to top and roll over. How about Japan? Bullish signal in Japanese equities. And last, we have the MSCI Hong Kong. And yeah, so far this is fairly bullish as well. Not as strong as the other ones, but definitely in an uptrend. Emerging markets, that one I do have tracking data on. Bullish signal across both indicators on the short-term basis, bullish on an intermediate term. Question is this is also very, very, very dollar sensitive. Will the dollar upend the EEM as well? That is a question to come. Let's move into the bond market. We've got first up TLT, one we talk about all the time. On Friday we reviewed this. You have to look at this from the moving average perspective as bearish, and people will look at it as bearish. The problem is the bond market is more than a chart. There are people that strictly trade treasuries based on chart patterns. And it's kind of dangerous when you don't understand what the Fed is doing. The Fed's goal is to reduce interest rates with QE, and it's hard to imagine that the entire market is going to defeat the Fed. So from a short term and from an intermediate term, this chart is bearish, but the short-term indicators, believe it or not, are actually bullish. Interesting. I bet you didn't think that I was going to say that. Let's move on to AGG, which is an aggregate bond index, and that's certainly not it. Here's the aggregate bond index. Bearish on the intermediate term because it's floating underneath its 50-day moving average, but the short-term indicators are bullish as it's hugging its 100-day moving average. And remember, if TLT is going to head higher, if treasuries are going to head higher in price, well, this fund is going to, because it also holds as part of its component U.S. Treasury securities. How about high-yield bonds? This, we've got bullish signals. Well, on momentum, we just flipped to a bearish signal on price. And high-yield bonds, you can see on the intermediate term, it is bullish here across 50 days, tagged to 50 days, trying to hold it here. But this recent close under it is just causing some sign of concern that this could be a topping pattern. Remember, high-yield bonds do follow equity, so keep that in mind. And we'll look at tips, and we have to assume that tips are going to be in a bullish pattern because they follow your precious metals. And certainly enough, we've got across the 50-day reconfirmation. It's up here, and bullish signals across the board on the trade screen. And let's take a look at the dollar, and we'll kind of end there, and then I'll kind of share with you what we've got going on here. The dollar does look very bearish on an intermediate term, right? It crossed its 50-day and has not yet reconfirmed it. This is something that I've referred to in some of my other videos about this being a long bottoming pattern on the dollar. The short-term indicators have been flipping back and forth, almost every 3 or 4 days. So right now they are bearish. But they could flip bullish. Remember, bottoming patterns are a process here, and unless the dollar starts to head lower, what I expect it to do is going to confirm the bottom side of the 50-day moving average. That's going to bring in more sellers. But if it doesn't break down below here, then and it continues to run in a sideways pattern, that is going to be a bullish pattern for the dollar, and that could be bad news for the broad equity market in many different ways. All right, so let's talk about kind of what we've got going on here with our inaugural edition. So just behind the scenes, no video of me today, and mainly because I'm not dressed up for that, but I do have full access. I do pay for full access to the Morningstar database, where I can dump an immense amount of data into a spreadsheet, and I built some short-term indicators, and depending on your feedback. And so we'll just say that we're going to work through this together, that I can add more features to it and add intermediate signals to it. I had kind of plans to do that, but I'm excited to work with you. If you enjoy this video, if you'll support this and you want to be a regular part of the show, let's give me some constructive feedback on ways we can improve it, and I'll work on, and I will work with Morningstar. One of the great things about Morningstar is when you pay them a lot of money, as I do, if you need help, they are there. So if there's something I can build into this, and I will be working on that maybe tonight to see what else we can put into that spreadsheet to help enhance and just kind of look at the market from a short and intermediate term perspective. So if you'll give me some feedback, let me know if this is what you liked, if it wasn't, what you didn't like. Again, let's keep it constructive, so that way we can try it again and see if we can work through this over the weeks that come to make this something that you look forward to watching and I look forward to doing. I'm your host, Steve Van Metre. Thanks for joining me. Hope you have a great weekend, and we'll be back on Monday with our regular updates. The content of this video provides educational information only, is not intended to provide investment or other advice. This material is not to be construed as a recommendation or solicitation to buy or sell any security, financial product, instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre on personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advisors, Inc. or Steven Van Metre Financial.